Welcome back to the channel. My name's Robert and I'm a funded trader with years of experience trading with various prop firms. Today, I'm going to be discussing Lucid Trading's consistency percentage rule, what it is, how the rules differ between their pro accounts and their direct accounts, and a little bit later in this video, I'm going to share with you something for free that's going to help you to get paid faster. So trust me, no one else is talking about this right now. So let's go ahead and get right into it right now. The first thing that we have to understand about this rule is that there's actually two different versions of this rule, two different amounts. So the first route that you can take to get funded for Lucid Live is the evaluation route, right? That's where you take the test and then you go onto the Lucid Pro account, which then goes through to the Lucid Live account. The second way is the direct route, which is straight to funded, and that involves purchasing a Lucid Direct account on the website, and from that, you can go directly into the Lucid Live account. Okay, good. So here's the main differences in the payout rules between those two paths. You've got the Lucid Test / Pro, which is the evaluation path, and that's cheaper, more lenient consistency rule, like at 35%, and you only need 5 profitable days, but you must first pass a test to qualify for this account. And the second way, Lucid Direct, which is the straight to funded option, is instant funding. There is no test, but it's a stricter consistency rule at 20%. You need 8 days, and it costs more up front. So the different routes to the Lucid Live account, you've got Lucid Test, Lucid Pro, and then straight to funded, which is just Lucid Direct, which goes directly to Lucid Live. The difference is in Lucid Pro, you have a 35% consistency percentage rule, and in Lucid Direct, you have a 20% consistency percentage rule. Okay, neither the test nor the live accounts have a consistency rule at all. So let's look at the bigger picture about this. Let's say, regardless of which payout cycle you're on and whatever total account profit you have made in your current payout cycle, your largest single winning day can't be more than either 35% for Lucid Pro or 20% for Lucid Direct of your total account profit. And the consistency formula is as follows. Largest single day divided by total account profit equals the consistency percentage. So here's an example, and this is for the Lucid Pro, the evaluation path. Ashley has $3,500 in profit and is getting ready to request a payout in her Lucid Pro account. Her largest winning day is $1,250. To check the consistency rule, we simply take her largest day, $1,250, and divide it by the total profit, which is $3,500. Then we apply the formula. The largest single day divided by the total account profit equals the consistency percentage. So $1,250 divided by $3,500 is more or less equal to 0.357. We take 0.357, which equals 35.7%. We can round that up to 36%. And since 36% is greater than the 35% requirement for the Lucid Pro account, Ashley would not be eligible for a payout and would have to earn more to bring her total account profit to bring it up so her consistency percentage would be below the necessary threshold. Let me show you. So Ashley trades for another day and earns $300 more. So her total account profit is now equal to $3,800, which is $3,500 plus $300 equals $3,800. That's her new total account profit. And then we can apply the formula. The largest single day divided by total account profit equals the consistency percentage. So we've got $1,250 divided by $3,800 is more or less equal to 0.328. So 0.328 equals 32.8% or 33%. And since 33% is less than the 35% requirement for the Lucid Pro account, Ashley would be eligible for a payout as long as she has followed all the other rules. Okay, so let's do another example now from the Lucid Direct. And we'll say that Bill manages to make $4,300 in the total account profit in his Lucid Direct account. His largest single day was $560. Now let's see if Bill meets the 20% consistency rule. So we'll apply the formula. The largest single day divided by the total account profit equals the consistency percentage. So 560 divided by 430, or 4,300, is more or less equal to 0.130. So 0.130 equals 13%. And since 13% is less than the 20% requirement for the Lucid Direct account, Bill will be eligible for a payout, as long as he has followed all the other payout rules. Okay, so can we calculate a dollar amount and make this easy? And the answer is yes. I did some math, so you can just keep this super simple. All right, and I'm going to show you the exact maximum amounts you can make. You can profit each trading day, depending on your payout cycle and your account type, to get the maximum withdrawal amount in the least amount of time. Now, there's a caveat. This assumes that you want to get the maximum withdrawal amount. You might not. You might want to get the minimum withdrawal amount, and that would change this. But let me know in the comments if you're doing something like that, if you want to go on that path so you would have more funding for the live. Evaluation path. Okay, so let's start here first, and let's just bear with me, and I'm going to show you what I mean. This is the maximum payout amount that you can request per cycle according to their website. So in the Pro account, you have $50,000, and your first and second payouts are capped at $1,500. The third and fourth payouts are capped at $2,500, and etc. You can see the rest of the chart. And then this would be the maximum amount that you could make per day with a 35% consistency target, right? So $50,000, your first and second payouts, the maximum that you could make in a day would be $525 if you were trying to get the payout in the least amount of time. For the third and fourth payout, it would be $875. The fifth and sixth, it would be $1,225, and so on and so forth, right? So then let's take a look at the Lucid Direct numbers. Now, the rules are slightly different for Lucid Direct payouts, and it's beyond the scope of this video to go into all the details about the rules. I'll leave a video up here where I have done a video on the rules, and you can go and check for yourself. So we have $50,000. Let's say the first payout target is $3,000 for a $50,000 account, and the second through sixth payout is $2,500 for a $50,000 account, so on and so forth. But here's where the change happens, and I want you to notice this. So if we use a 20% consistency rule, and we have to hit $3,000 in the $50,000 account for the first payout target, that means that our maximum profit day should be $600 if we're trying to do this in the quickest way possible. And then the second through sixth payout would be $500. And the thing to notice about this is that in the straight to the funded and the Lucid Direct accounts, the numbers for these consistency, they're much smaller because the consistency target is only 20%. These numbers are much smaller, which makes it more difficult. And it's important to note that. So as a bonus, I've created a spreadsheet of all the information that I just shared with you in this video. To access it, please like, subscribe, and share this video. Take a screenshot of where you shared the video to, and either A, post it in our Discord, or B, just email it to me and I'll give you access to the spreadsheet. And if you're not already funded with Lucid Trading, there is a link in the description that you can use along with my coupon code RTF for a 40% discount plus a bonus 5% discount for new members. So if you want to learn more, here's another video with a playlist about Lucid Trading. We'll see you on the next one.